Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to be speaking about GBPUSD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are the hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what do we have? Now here on the monthly, we can see how the market is currently testing a quite strong level of previous monthly support, which was acting as support here, again here, and has just been tested and rejected as we're speaking to the upside, so it was respected once again as support. Now, in a situation like this, we could expect more bullish price action to be developed away from this historical structure level as happened here, here, and again here. So from a monthly perspective, everything seems pretty bullish. Now, if we drop down on the weekly, what do we see? From a weekly perspective, we can see how at the moment the market is kind of trapped in a range. We have the bottom of the range here, and we have the top of the range here. In fact, we can see how this level was acting as previous resistance here, again here, and at the moment is getting tested as resistance. At the same time, this zone was acting as support here, again respected as support here. Now, even though it seems like the market is getting rejected to the downside, we have to keep in mind that it's quite clear that the market at the moment has intentions of trying to break the top of the range. In fact, we can see how the break above was very, very close. We almost closed above this previous resistance, and we had a quite strong push above the zone. So this makes it more likely that the market would manage to break the top of this range, even though it hasn't broken it yet. If the market from here will reject to the downside, we have good probabilities that we will remain inside of this range, at least at the moment. However, since we still have strong bullish momentum, there is still the possibility to see, in the short term, a potential break above this range. Dropping down the daily time frame, what do we have? Now here on the daily time frame, this is where things get very interesting. In fact, what we can notice is that, first of all, from a structure perspective, the market is currently testing exactly the previous daily resistance turned support. In fact, from here, this previous rejection to the downside was created. Now, what we know is that previous resistance, once it gets broken to the upside, it becomes support. So this previous level of daily resistance is now acting as support, and we could expect a potential rejection away from this support, which would also potentially create this daily impulse correction and impulse pattern to the upside. It is also important to keep in mind that if you have an impulse and you want to measure the potential correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a market which at the moment is testing its zone in between the 0.32 and 50% of the Fibonacci taken on the daily impulse, which is a quite strong level of support and demand. Now, this creates confluence of support at this level because we have both the previous resistance turn support and also the Fibonacci levels all lining up exactly at the same zone, creating a higher probability of seeing a potential rejection to the upside away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, and we check the data for the pound, what we can see is that with the last reports, net positions have been slightly decreased. We went from minus 17k net positions down to minus 24k net positions. However, in the long term, net positions have been massively increased basically tripled, going from minus 68k net positions all the way up to minus 24k net positions. So even though we're seeing short-term weakness, which we are seeing, in the long term, GBPUSD looks quite bullish. And combined this with the fact that we're currently rejecting a quite strong monthly demand and support area, as we have identified at the beginning of the video, it seems like we have a good chance for a potential rejection away from this area. So how we could be approaching this potential move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, you want to learn more, I really suggest that you go and check out transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility at the moment to gain completely free access to the mentorship program by following these 3 easy steps. So I really suggest that at least you go and check it out at transparentfxtrading.com. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.